It's very, very easy now for Bitcoin to be argued as a credible investment now that you've got these ETFs, you've got BlackRock recommending allocations as high as above 70% in some analyst reports. Fidelity, I think, is 3% allocation. You just run that, say 3% of $550 trillion goes into Bitcoin, multiplied by anything from 1 to 5x, depending on where we are in the cycle. You get to some very large numbers very quickly.
The emergence of Bitcoin exchange-traded funds, ETFs, has obliterated barriers, creating a seamless connection between institutional finance and digital assets. This is not just evolution, it's a financial renaissance, ushering in a new era of economic innovation. In 2025, this shift is no longer hypothetical, it's happening. Visionaries like Willy highlight the magnitude of this transformation, pointing to financial titans like BlackRock and Fidelity as active architects of Bitcoin's ascent. BlackRock's models propose allocations as high as 70%, while Fidelity's conservative 3% recommendation could still trigger an avalanche. With over $550 trillion in global assets, even a 3% shift would unleash trillions into Bitcoin. Wu predicts such a capital surge could multiply Bitcoin's value fivefold, sparking a meteoric rise that reshapes global markets. This year, Bitcoin is no longer the speculative play of the past. It's a strategic pillar in institutional portfolios. The narrative has shifted, and the world is witnessing Bitcoin evolve from a digital disruptor into the backbone of a new economic framework. Let's watch clips from Willy Woo's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
Where does Bitcoin sit in a 10,000-year view? In this case, it was like 10,000 years into the past, not the future. But we can get to that. And really, it was like, if you were to look at the fundamentals of money, we started off with commodity money. And we basically built this kind of Lindy effect on gold and silver as money, because these things were very hard to get more of, very hard to inflate the supply. And as we moved into the industrial age, there was a change where we tended to trade the paper that was claimable for the gold and silver, because it's a pain in the ass shifting lumps of silver and gold around. So with the development of the industrial age, we started to paperize. Paper's much quicker, and then now we're in a digital age, and what we're seeing is a lot of online banking, a lot of digital payments, but that stuff's not internet native. And really fundamentally, Bitcoin solved this thing that was thought to be solvable, but it took until the Satoshi white paper in the tail end of 2008 to solve. What he solved was the ability to put scarcity online. Because up till then, I send you a JPEG, you can just copy it to infinity. And so by putting scarcity online, it was the first time we could actually have a real internet native money. And so really the thought is we're in this kind of transition to a fully digital age where so much of our economy is online, and we didn't up to now have a digitally native form of scarcity, a form of money. And that's Bitcoin. And so that's the 10,000 years from the past to where we are now.
Do you think that we get rid of fiat completely with the advent of Bitcoin?
Yeah, this is a really interesting thing when you look at 10,000 years of money, and you find that, we've had first inklings of gold coins and stuff for I think 700 BC. Now we talk about money going from, world reserve currencies changing every 100 years. But you'll find that they were always tagged to gold or silver until this very, very brief experiment of fiat since 1971, when the gold window was closed. And That's never gone well in the history of the world. So I don't really look at this era of 50 years almost, roughly, as a real zone. You see Weimar Germany went off the gold standard, and it hyperinflated almost immediately. The whole world's on this fiat right now. I think it's a brief experiment. So now the bigger picture is Bitcoin's in the process or attempting to flip gold and silver, like multi-thousand years of Lindy effect, building trust in gold, silver as a form of money. And it's only 15 years into this. We have 15 years of data on it now, and it is going to be quick, and it's not even up for debate. People may want to debate it, but they haven't looked at the data. As of where we are now, it's very reliably 500 million people that have some sort of ownership of Bitcoin in 15 years. And if you run this data forward, we will be 1 billion people having some ownership of Bitcoin by the end of this decade. And by 2035, if this curve continues its path, we're pretty much near majority adoption of Bitcoin as an investment holding. And then the question is this going to be a reserve currency? Will it be money? Will it be a medium of exchange? But it's happening very, very quickly.
So we're at 500 million now, and you see us going to 1 billion in the next...
by the end of this decade.
By the end of this decade, okay.
Yeah,
so that's 2030.
Yeah.
Okay, interesting.
Because when I was starting the early research, I would do things like look at Google Trends and so forth, and things were doubling every year. That was how quickly it was growing. Now it's not compounding quite like that in terms of user adoption, but in terms of we're at 5% of the world, that'll compound very, very quickly because there's an adoption curve, right? Once you hit 16%, that's when you hit mainstream. It gets to 50% very, very quickly. Think about it being barely over $1 trillion and the speed of the adoption and the fact that more than 99% of global wealth is not invested yet, and the kind of reflexive nature of this investment that like $1 invested can shift market cap $5 in a bull market. Bitcoin's set to explode into a very high number in the coming years, given this adoption. Very reliable adoption. It's very, very easy now for Bitcoin to be argued as a credible investment now that you've got these ETFs, you've got BlackRock recommending allocations as high as above 70% in some analyst reports. Fidelity, I think, is 3% allocation. You just run that, say 3% of $550 trillion goes into Bitcoin, multiplied by anything from 1 to 5x, depending on where we are in the cycle. You get to some very large numbers very quickly.
Willy highlights Bitcoin's transformative journey, positioning it as the first internet-native form of scarcity in monetary history. Tracing the evolution from gold and silver to paper currencies and now digital money, he emphasizes Bitcoin's revolutionary role. With nearly 500 million holders today and projections to reach 1 billion by 2030, its adoption curve is remarkable. Backed by institutional endorsements like BlackRock and Fidelity, Bitcoin's growing credibility and market impact could redefine global finance and accelerate its integration as a mainstream asset. Willy highlights the complex dynamics of Bitcoin markets, emphasizing the contrast between real Bitcoin and synthetic exposure through paper instruments like futures and derivatives. While Bitcoin's supply is capped at 21 million, synthetic markets have expanded exposure beyond this limit, dampening price growth by diverting demand away from actual Bitcoin. Advocates buying physical Bitcoin instead of derivatives to drive value and avoid risks tied to centralized custody, a lesson learned from the flaws of the gold standard and fiat systems. Let's watch more clips from the interview.
Everyone knows there's only 21 million Bitcoins that will ever be made. But I'm saying that with synthetic exposure, we may have exposure of 42 million Bitcoins available. Quite simply, before futures and options came onto the market, if you wanted to buy a Bitcoin, someone with Bitcoin had to sell it to you. And people didn't want to sell their Bitcoin. And this is very much the case in 2017. Bitcoin rallied from $150 in 2016 to $20,000. And you notice the price went exponential because as people wanted to buy this, price had to rally because the people selling it was so few. So few people had it. Fast forward another 4 years, and the CME now has liquidity. All the exchanges, for the most part, were starting to offer futures, perpetual swaps, derivative instruments. Now suddenly, someone on Wall Street with, this thing's a bubble. I want to short this. That you just front your US dollars and say, I'll sell you that exposure. And so effectively, anyone going long didn't have to buy the Bitcoin. They could buy the paper instrument. And now anyone with US dollars could also sell you that Bitcoin exposure. So indirectly, there's only 21 million spot Bitcoin, but the exposure for people who are only interested in the movement of price, they could access the synthetics, and there could be 100 million synthetic contracts of one Bitcoin equivalent to be bought. When we talk about the spot market and a real Bitcoin, that's secured by energy, and that is a very fair ledger and very hard to corrupt. Once you create a paper market around trading synthetic exposure to it, it creates kind of a dampening effect of how high the price can go. Because if there's a lot of people needing access to Bitcoin exposure, then a lot of people with fiat and you can print infinite fiat can fulfill that. So I always say, if you want to go long Bitcoin, you should not buy the paper, you should buy the real thing, because you're going to further the case of the price going up. And, to be clear, I'm highlighting a risk. This risk is not really that large right now, because we're somewhere around 2 to 4% of the total market cap of Bitcoin in paper, whereas gold is 100%.
Yeah.
So it's still very low. I think that Bitcoin, if it grows quick enough, Bitcoin is barely over $1 trillion. The US M2 is 25 trillion, something like that, in the mid-20s.
Yeah.
So if Bitcoin starts to approach USD market cap, and it can do that quickly, over the coming decade, and then it becomes quite immune from that type of paper attack.
Do you consider the ETFs to be paper Bitcoin, or are you happy with the one-for-one?
It's a different risk with the ETF, because the ETF is spot. I'm tracking it on chain as well, because when you buy more ETF, more spot Bitcoin flows into custody.
Yeah.
So in that regard, it's helping this balance where institutions can now buy spot through the ETF. That's a different kind of risk in that we've all said, not your keys, not your coin. And if we get enough centralized entities that are holding the Bitcoin, then it opens up the risk of nation states basically taking control of that. And that's exactly how we ended up in fiat. Gold standard was great, except it was many, many nations that hold the gold reserve, and then Bretton Woods meant that it would be the US that would hold the gold in Fort Knox, and everyone would trade to the US dollar, and the US dollar could get the gold if you claimed it. And at some point in 1971, Nixon closed the gold window, and they snipped that claimability. Number one, the gold was never audited. Right? We never knew if it was all the money in the world in this one spot, and it was never audited. Bitcoin, every second we know the audit of that and who holds it. And number two, currently it's so decentralized the government cannot seize it and then snip. In a new Bitcoin standard, if you're denominating in Bitcoin, they cannot snip it if it's decentralized. So that's the risk, I think. It's a risk. Currently, there's a lot of liquidity coming into the system, meaning governments are printing more money. And And with the high interest rate environment, actually money was being pulled out of the system, and you could see that we had a lot of pullback in all the risk assets, and equities pulled back, Bitcoin pulled back. And every single cycle in which liquidity was injected into the system, more fiat being printed, Bitcoin has rallied. Not immediately. It takes, I think we've talked about, more than a couple of months before it really rips and takes hold. And so we're in an era where probably we're gonna rally hard. Typically, these are 4-year cycles as well. People think it's a halvening, pushing the price of Bitcoin up because there's a supply shock. There's a reduction of new supply coming in, but also reinforcing that has been the 4-year liquidity cycle. And so we're in that phase now. Liquidity is climbing, as you know.
Bitcoin's trajectory in 2025 is capturing investor attention, with analysts predicting significant price growth fueled by institutional adoption and favorable regulatory trends. Bitcoin's value remains below $100,000 after hitting a record high of $108,300 in December 2024. Analysts now forecast a rise to $225,000 by the end of 2025, highlighting Bitcoin's growing appeal as a hedge against inflation. Willy Woo's insights resonate here, emphasizing the importance of owning real Bitcoin over synthetic derivatives to drive authentic value and reduce systemic risks. As institutional players like BlackRock's iShares Bitcoin Trust make waves, Bitcoin ETFs are reshaping the crypto investment landscape. Despite record outflows of $332 million from IBIT in January, the ETF has seen $36.92 billion in inflows since its launch. These developments align with Woo's perspective on Bitcoin's resilience and its transition from a speculative asset to a mainstream financial instrument. The introduction of ETFs not only accelerates adoption, but also helps institutional investors access Bitcoin in a regulated, transparent manner. With Bitcoin's adoption nearing 1 billion users by 2030 and a market cap poised to rival global fiat systems, Woo's prediction of rapid growth underscores Bitcoin's pivotal role in modern finance. The convergence of favorable regulatory policies, institutional interest, and a burgeoning user base sets the stage for a transformative decade, further legitimizing Bitcoin as a cornerstone of global wealth. Investors, however, must heed Woo's caution. Real Bitcoin ownership, not synthetic exposure, is key to ensuring sustained growth and decentralization. As we wrap up, what other impacts do synthetic Bitcoin products, like futures and derivatives, have on the actual value of Bitcoin? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to subscribe.